Have you ever entered a trade on Breakout, then suddenly the market flips the card on you? Do you want to avoid those kind of mistakes? If yes, then this video might change your life and approach towards Trendline Breakout entry. In this video you will learn how to approach trendline breakouts, how to reduce the risk when trading trendlines, how to see if it's a valid breakout or not, and lastly how to choose the right correction. I know some of you have tried to use some trendlines during your trading career in one point. But imagine if you enter a trade here. Then it breaks to the upside. But it suddenly reverse and stop you out with a huge loss. But every time when you search on how to trade trendlines online, you will always hear that you must give your trade a little bit of room to breathe by widening the stop loss. Like, bro, how could you tell me to keep increasing on how much I would lose? So in this video I want to cover even that. So let's begin from scratch so that we can all have full understanding of how to approach them easily. The market moves in waves. So in this section of the video I want to teach you how to use market structure with trendlines. As we can see on the first one is a bullish trend. When the market is bullish you will see that it is only making new highs without a new low below the previous low. Higher high means new high in simplest form. Then higher low means that we have new low inside the high. Then on the second one we can see that we are bearish. The market is going down. And when the market is bearish you will see that it is making new lows without making new highs. What I mean by that is the market will go lower in a form of a zigzag-like structure. But I will give you a full demonstration of that. And also on how the market changes from being bearish to bullish and vice versa. This is a bullish market structure. As we can see the market is moving higher in a form of a zigzag. Also note that the higher low is not breaking the previous higher low. But the new higher high is higher than the previous high. But what happens if the market breaks this higher low? Now here we can see that we have a new higher low, then the market moved for a bit to stop in the middle of the swing high and low. And as traders we should avoid trading in the middle of a trend because the market can go both direction. As we can see from here the market dropped below the previous higher low. This goes to show that the market might potentially change from being bullish to bearish. To spot this easily, you just have to understand that when the market doesn't make a new high, but it start to make a new low, then we might potentially get a reversal. In this case this is how the market changes direction from being bullish to bearish. And another thing to note is that this can be challenging to spot on a chart. But if you put a lot of time on a chart, you will be able to start to see this easily. Then this is how the overall trend will be. And guys, pay attention to this high here. Because sometimes the market can make a new high before reversing to the downside. This one here, it didn't have a new high before reversing. The market will always keep going higher if the market doesn't break the last higher low. As you can see here the market made a new higher high before reversing. But before we can start taking any trade, we should also check that the last low is also broken before we can try to make any setups on a chart. The rules still applies even when the market is bearish. For the market to reverse to the upside, it first needs to break the last low or high. So moving you will understand why this market structure is very important to approach trendlines. Because everything we put on a chart is just a tool to help us analyze the market. And at the end of the day price action is the key to everything. Here now we can see that the market broke the last low or high. In this case it will indicate that the market has the potential to reverse to the upside. So what we need next is a retracement to the previous low or low. The market can do wonders sometimes by retracing back close to the previous low or low. For in case you are in this type of situations, you should have a backup strategy because you might miss the low while trying to enter late on the breakout. Now let's get to the juicy part of the video. Here we can see that we have a bearish trend that is broken. By just looking at trend lines alone, you will also see that the market is making a correction to push higher. So would you buy if the market breaks this trend line? Now the market is breaking to the upside, would you buy? If yes, then wow. Right now you are in profit. And you have also protected your trade with a stop loss, which is a good thing. Then boom. Your trades has been stopped out. And you start to question yourself on why is this happening? Problem is that people don't want to improve their trading strategies. And for those traders who doesn't use a stop loss, then I guess they will have to deposit more funds. Because I know those traders who will deposit even more money when the trade is going against them. So don't be that guy, bro. The problem with this trade setup is that it didn't break the previous low or high. And on top of that, entering on trendline break will always be late. And it doesn't even have a solid price action validation. If you have entered a bit early, you could have protected the trade by putting it to break even. Here we can see clearly that the market has broken the bigger structure low or high. Then it started to make a correction. Then after the correction the market pushed higher. So even on the correction here, you still have to wait for the market to break to the upside and break the previous small low or high inside the correction. Before we begin with some examples on a chart, I want to point out something that will be on a separate video. The one thing that you should know as a trendline trader. You have to fully understand impulse and correction. Impulse is this one here. They are strong candlesticks which forms the direction of the market. And a correction is like a pullback, consolidation, retracement. Damn, there's a lot of names for this now. But the correction is very slow and it goes opposite direction of the impulse. From this examples we can see that impulse is faster and bullish, while correction is slow and it's going down. For me to draw trend lines or for practice purposes, you must draw those lines first, then after draw some market structure on a chart. This will help you to be more accurate on your analyses too, so let's start by drawing the trend lines on a chart. Now that we have our trend lines on a chart, let's draw the market structures now. Now by doing so we can identify if the trend has changed direction or not. From here we can clearly see that the market didn't make a new high. It just dropped lower. Because the market is retesting the trend line. Now I would like to show you two types of traders and approach. And also if you want things to be clear you can add support and resistance. By looking at the correction, for someone who is trading the breakout he will enter when this correction is breaking to the downside. Now we will do a trade when it's breaking as an entry. And take profit we will target this low. Then you will decide on which breakout trader you want to be. This is how the trade setup should look like. But because you came to easy Forex strategy. What if I tell you that this is very risky and we can improve it? So before we begin I have big announcement to make. We have Telegram channel now. The link is in the description below. In Telegram you will get free PDF after every video has been posted, free weekly market analyses, free signals that everybody can understand. And you will also be able to have a chart with me. Also don't forget to subscribe to the channel. Because on 10K subscribers I will do a giveaway to one of my subscribers. On this part of the video you have to pay full focus. Because everything that you have learned in the previous video will apply here. If you didn't watch it then you will find the link below. So I will zoom in here so that I can explain how you can enter before the breakout with low risk and high reward. Because we know that we are bearish we will try all our best to be on the right side of the market. From this area we will start by pointing out our sell rules first. Then after we will follow all the rules to the T. We will do all the checklist one by one. Firstly because we are selling we will start by finding the supply zone. Secondly we will find a bullish candle before a bearish candle close. And also price must not trade higher than the supply zone's high before the market can close with a bearish candle. Now on the third checklist we can see that we have a bearish candle close. After when price has touched the supply zone. Then the next step is to decide on which entry level you want to trade at. So you don't understand which level to choose then I suggest you watch the video in the description below. Because I have explained them clearly. Now let's compare the two traders. As you can see we have a small stop loss either way plus a higher potential reward. So in this case you will choose which trader you want to be. The breakout trader. Or the before breakout trader. Price action is fractal guys. The lower we get we will still get the same patterns over and over. So just look at this pattern. It will demonstrate everything you need to get started to trade breakouts. If you are using trend lines. If we put 3 traders in a room. They will all come up with their own experience through chart time. What I mean is that always trust your analyses. If not then get some help. From this chart I want to show you that sometimes to have other trading strategies can help out in approaching the market. Also another tip to find market structures is to use support and resistance. This will help a lot to find the structures very easily. Then drawing trend lines should not be a problem. From this example we can see that a breakout trader will wait for the market to move a lot. Then after he will wait for pullback to enter the market. This will help a lot to find the structures very easily. If you trade the trendline breakout like this. The problem is going to be when you lose a trade, the loss will be huge. Let's say a breakout trader lost the first trade. Then he will try this setup again. But the problem is one. He lost a lot of pips on the previous trade. This time he is still risking more. Unless if he uses proper risk management. Then after this breakout traders has won this trade. We will still be in profit but very small profit. If you have watched the previous video, then I will zoom in here so that you can try to do this example yourself. I will also give you some hints. Now before we end the video, I would like to show you an example whereby if two traders lose the same trades. The first traders is the breakout trader. Then now let's see how he lost his trade. You can also see that the main point of this video was that I need to see more people taking trades before the breakout, and then now let's see how the before breakout trade lost his trade. As you can see, these two traders lost a different amount of pips. But with calculated risk, the two traders can lose the same amount of money. If someone is able to explain this better, please comment below. I will pin it. So anyways guys, I will see you on the next video.